Do you completely trust your bank? In 2023, one of the biggest banks in Silicon Valley shut down in just a few hours. People suddenly couldn't use their money at all. Imagine waking up and not being able to access your own savings. What if I told you that keeping all your money in the bank might be one of the biggest financial mistakes people make today? While you're peacefully sleeping, believing your money is safe, it's actually losing value because of inflation. It's affected by decisions made by politicians, and it's earning so little interest that it might be less than what you pay for a few hours of parking at the mall. The truth is, the system that we all learn to rely on is slowly letting us down. Every single day, the money just sitting in the bank is losing power and value. But don't worry, I'm here to show you something different. I'll tell you about 7 smart options that can be safer and more useful than letting your money stay in a bank account. Each one helps in its own way. Some protect your money so it doesn't lose value. Others help you earn money without having to work more. And one of them might seem a little risky, but many people are already using it to grow their savings without drawing attention. The last idea I'll share is the most talked about and debated of all. But before we begin, I want to ask you something. Have you or someone close to you ever gone through a situation where a bank failed or lost money during a crisis? Maybe during the 2008 crash or sometime more recently? If so, feel free to write about it in the comments. Your story might help someone else avoid the same problem and keep their money safe. Now that you're thinking more about it, let's take a look at what's happening in the economy right now. In the US, inflation is still high, around 2.8% every year. This means that the money you keep in the bank is slowly losing its power to buy things, even if you don't touch it. That's why it's so important to learn about better ways to protect what you've worked so hard to earn. The Federal Reserve is still keeping interest rates above 4.25%, which makes borrowing money more expensive and slows down the economy. Even the big banks are still feeling pressure. Think back to Silicon Valley Bank. It collapsed overnight. On top of that, new import taxes might make prices rise even more. With all this happening, what is your money doing sitting in the bank? It's losing value, not earning much at all, and still at full risk if the system has problems. That's why today we're going to explore real assets, things that can actually help keep your money safe. The world isn't the same as it used to be, and saving like people did in the past might end up costing you more than you expect. These are 7 assets that many people believe are safer and smarter than leaving all your savings in a bank. Let's begin with the first one, which many experts think should be the base of any solid plan to protect your money. It's backed by the full trust of the US government and can give you better returns than most savings accounts. Asset 1. Treasury bonds. We'll start with one of the most cautious options, treasury bonds. Many people trust these the most. When you buy a treasury bond, it's like you're lending your money to the government, and in return, the government promises to pay you back with interest. Compared to a bank, the risk here is very small. Right now, US. Treasury bonds are offering over 4% interest each year, and in some cases even more, depending on how long you want to keep your money invested. That's much better than the interest you'd earn in a normal savings account. If you want something safe, steady, and don't like taking chances with stocks or cryptocurrency, this might be right for you. Plus, in uncertain times, these bonds usually become even more valuable because many people see them as a safe choice. The only catch is that they aren't always easy to sell before their term ends. You can sell them earlier, but depending on the market, you might get less than expected. So it's a better choice if you're thinking long-term. To get started, you can go to Treasury Direct and buy bonds from the government for as little as $100. Or you can use online brokerages like Fidelity or Vanguard to explore more choices. Treasury bonds offer safety, consistency, and right now, even better than usual returns. Now, if you're someone who prefers to put your money into something you can actually see and touch, something that could bring in money every month and grow in value over time, then the next asset is a great fit. Asset 2. Real estate, a solid and tangible option. People often say money doesn't grow on trees, but a good piece of property can sometimes feel like it does. Real estate is something physical and real. Even if prices go up and down from time to time, over the years, most properties go up in value. They can also protect your money from inflation and help you earn passive income through rent. Here's something interesting. The real estate market in the US slowed down in 2024, but in 2025, it's already showing signs of picking up again, especially in big cities and areas focused on shipping and storage. And remember, while money in the bank is slowly losing its power to buy things, a property can help you build wealth over the long run. Some cities, like Austin, Nashville, and Raleigh, have seen home prices go up by more than 40% in just the last 3 years. That kind of growth doesn't require you to be an expert in finance. Of course, real estate isn't perfect. There are costs like repairs, taxes, and sometimes you won't find someone to rent it right away. But if you choose the right location and type of home or building, real estate can be one of the strongest assets you own. And if you don't have enough money saved to buy a property, there's another way to get started. You can invest in a REITs, or real estate investment trusts, like Prologis or Realty Income. These are companies that own buildings and share the profits with investors. You can buy shares in them through the stock market, often with a small amount of money. Want something steady, something you can hold in your hand, and that gives you money every single month? Real estate is popular for a reason. But what if everything around you starts losing value and you're searching for something trusted by people everywhere for thousands of years? Let's talk about the next asset, something central banks use as a backup when things go wrong. Asset 3. Gold, a timeless safe haven. Good old gold. It's been around forever. While countries keep printing more money and banks go through problems and big changes, gold stays the same. It doesn't change, break, or disappear. Long ago, gold was used by kings, countries, and empires as money. Even when other things failed, gold didn't. And this isn't just something from history books. In 2025, gold prices went over $3,000 for 1 ounce, the highest price ever. This happened because the world is full of uncertainty. There are conflicts between countries, and some people are even saying the US might check its gold supplies again. Gold is special. Governments can't print more of it. It's rare, it's solid, and it lasts forever. You don't need it to pay you interest, because its main job is to protect your money. You can buy real gold from trusted sellers like APMEX or JM Bullion. If you don't want to keep gold at home, you can also invest in funds like GLD or IAU that represent gold without needing to store it. Still, gold isn't perfect. It doesn't give you money every month like rent does. It just sits there. And if you want to sell it quickly or hope for huge profits fast, it might feel a little slow, but when it comes to protecting your money from disasters, it's hard to beat. Charlie Munger, the partner of famous investor Warren Buffett, once said that gold was something families in danger could sew into their clothes to stay safe, like Jewish families in Vienna in 1939. That shows how powerful and trustworthy gold is. And if even the world's biggest banks are buying gold right now, maybe you should think about it too. But now, let's say you want something safe and stylish. Something that gets more valuable over time and says something about your personality. The next asset might already be in your home. Asset 4. Collectibles and luxury items, hidden treasures. While your money is sitting still in the bank, some people are getting rich by selling things like art, special watches, and even rare toys. Yes, it's true. Some fancy items, like vintage watches, old cars, artwork, or limited edition sneakers, have grown in value faster than some stock investments. Take this as an example: a Rolex Daytona Paul Newman watch that was bought for just $200 in the 1970s later sold for over $17 million. A Ferrari 250 GTO from the 1960s was sold for $70 million. And one famous Banksy painting actually went up in value after it shredded itself in front of a crowd. These items don't just look good, they can also become very valuable. But like with anything, it's important to know what you're doing. Some collectibles may never grow in value, and you need to be careful about what you buy. Still, if you choose wisely, collectibles can be a fun and smart way to build wealth, while also enjoying what you own. What do all these assets share? They are rare, beautiful, and have a community of people who are willing to pay a lot for them because they are unique. Even simple items, like certain Lego sets, have grown in value by over 380% in the last 10 years, doing better than many traditional investments. These assets are hard to find, and they don't offer the same easy access as stocks or gold. However, for people who know how to play the game, they are real ways to grow wealth outside of the usual banking system. Now, companies like Rally and Masterworks are making it easier for regular people to invest in things like fine art and collectibles. These companies allow you to buy small portions of these valuable items, which makes investing in them more possible than ever before. If you have a taste for the finer things, patience, and a long-term view, this type of asset can not only protect your money, but also help it grow in an elegant way. I'm curious, did you know about using collectibles as investments before, or is this new to you? Have you ever invested in anything like this? Drop a comment below and let me know which of these first 4 assets you're already using in your financial plan. I love reading your comments and seeing how you're managing your wealth. Now, what if you want to keep part of your money in cash, but in a safer, smarter way? A way that keeps it safe from freezes, bank failures, and complicated banking rules. The next asset is almost invisible, but it can help you out in critical moments. Asset 5, physical cash, freedom in paper. Yes, this asset is money, but not the kind stored in your banking app. I'm talking about physical cash, money you keep at home, in a safe or somewhere where you can get to it easily. In the worst banking crises, like the ones in Greece in 2015, Lebanon in 2019, or even the Silicon Valley Bank collapse in 2023, people were left without access to their own money. Banks closed, people couldn't withdraw cash, and ATMs were empty. Having a cash reserve isn't some wild idea, it's just smart. Emergencies happen, systems can freeze, and cards can fail. Imagine you're traveling and your bank system is down, or your card won't work at the gas station. In moments like these, having cash on hand can save you. But remember, you shouldn't keep all your money in cash. The goal is to have a small amount, enough to cover 1 or 2 months of expenses in case something goes wrong with the banking system. Financial expert Suze Orman suggests having between $1,000 and $2,000 in cash at home, stored safely, not as an investment, but as a backup for true emergencies. Cash gives you privacy, quick access, and independence from banks. If you store it wisely, it can still be valuable. But what if you want to do something more with your money? What if you want it to work hard for you every single day, like a loyal employee? The next asset isn't something you buy, it's something you create. And it might just be the most powerful one of all. Asset 6, your own business, the asset you control. This next asset is something you don't buy, you create. It's one of the most powerful assets you can have in life, your very own business. When your money just sits in the bank, it loses value. The bank decides what to do with your money, while a business gives you control. It allows you to make your own decisions, brings in cash flow, and lets you grow at your own pace. You don't have to think about starting a huge company right away. A business can start small. It can be something online, like a website, or it can be a physical store. It could be offering a service, writing an ebook, or even creating a YouTube channel. Just like this one, entrepreneurs turn money into machines that make even more money. While a bank might pay you only 1% per year, a good business can give you 100% per month or even more. Take John, who started a small pizza place with just one oven. Today, he might have many pizza shops because he decided to make his money work for him. This isn't just for rich people either. Jeff Bezos started by selling books from his garage. Elon Musk put everything he had into new businesses that seemed impossible at the time. Sarah Blakely started Spanx with just $5,000, and now she's a billionaire. Of course, businesses come with their own risks and require a lot of planning and strategy. But if there's one asset that can completely change your life, it's this one. Platforms like Shopify make it simple to start an online store with a small investment. Websites like Etsy allow you to sell your crafts and skills. Asset 7, cryptocurrencies, the new era. Asset now. We're going to talk about the last asset on our list. It's one that some people think is just a big trend, but it's actually outperformed most traditional investments in the last 10 years. This asset is called cryptocurrency. It's a new kind of money, and it's changing the way we think about wealth. Cryptocurrencies, like Bitcoin, are digital currencies. They don't rely on banks or governments to exist. They are a scarce resource by design. Only 21 million Bitcoins will ever be created. If you had invested just $100 in Bitcoin back in 2010, it would be worth over $50 million today. Of course, just because it's done well in the past doesn't mean it will continue to grow in the same way. But the numbers don't lie. Bitcoin works 24/7, and it's instantly accessible around the world. Unlike regular money, it's not affected by political decisions or government policies. Michael Saylor, CEO of MicroStrategy, turned his entire company around by putting $4 billion of their reserves into Bitcoin. He calls it digital gold and believes it's the best way to protect against inflation. Yes, Bitcoin can be volatile. Yes, there are risks involved, but in a world where even banks can fail and governments are in debt, it's something we can't ignore. Many large companies, funds, and even countries are starting to use Bitcoin. For example, BlackRock, the world's largest asset manager, now offers Bitcoin ETFs to its clients. In El Salvador, Bitcoin has become legal money, and companies all over the world are adding it to their balance sheets. If gold was the safe asset of the past, Bitcoin may be the safe asset of the future. The decision is yours, but in a world where traditional financial systems are showing more and more cracks, having a small amount of Bitcoin could be more than just speculation. It might be a smart way to protect your wealth. So now, I'd love to hear from you. Which of these 7 assets would you like to start investing in first? On a scale of 1 to 10, how valuable was this information to your financial planning? Leave your answers in the comments below. I read each and every one, and I'm really interested in hearing about your financial journey. Your feedback helps me create even more helpful content that can guide you in securing your financial future.